What's up, everybody? So, someone in one of my YouTube comments recently mentioned this, the Alta Fox capital management thing from about a year ago that went down with Hasbro, and I was not aware of this at all. And in the light of the current conversation that's been happening about the OGL controversy and Wizards of the Coast leadership and Hasbro leadership and everything else, I found this to be a very interesting read into the fact that at the very least there appears to be some investors who are on board with Hasbro who appear to have a better understanding of the tabletop and video gaming space and want to genuinely see the company profit, but in a way that is true to tabletop and video games and so on and so forth. Because the individuals that they proposed to come in and help manage things are all experts in like the tabletop and gaming space, and so that would have been something that, in my mind, would only have benefited Wizards of the Coast and Hasbro and brought shares up and everything else, but Hasbro ultimately rejected it because of reasons. But again, hindsight being 2020, I don't know if anybody there has any hindsight, but I can look at something like this and go, at the very least, there are people out there who have their heads screwed on right. And I can look at things like this and go, that's interesting. Hopefully they stick around and can help in the current crisis and whatever is going to become the next iteration of Wizards of the Coast, as it tries to navigate its way through the controversy that has been created under the current leadership. It's going to be very interesting to see where this all goes in 2023 because it's going to depend a lot on how the film is met, how Baldur's Gate 3 performs, things of that nature, the TV show, so on and so forth. So in the meantime, let's dive into this. So a year ago, almost exactly, February 17, 2022, Alta Fox Capital Management nominated five, this is their press release, highly qualified and independent candidates for election to Hasbro's board of directors. So Alta Fox Capital Management essentially issued a letter to shareholders which made the case for boardroom change following what they defined as years of disappointing results, poor governance, and questionable disclosure practices under the brand blueprint strategy, which is they're currently using. They produced a 100-page deck which outlined the value-enhancing recommendations, including a tax-free spin-off of Wizards of the Coast segment that could unlock an additional $100 per share in upside. And they saw a 3-year path to reaching $200 share price with a refreshed board, new strategies, improved capital allocation, and the separation of Wizards of the Coast. So they were wanting to take Wizards of the Coast and make it its own thing and have that thing be governed by different people who would help in the evolution of the space. It's very interesting here. So Alta Fox Capital Management, with its affiliates, which currently owned, or at the time owned, 2.5% of the outstanding shares of Hasbro, basically put forth these five individuals at the 2002 annual meeting of shareholders. And they issued an open letter and everything else at freethewizards.com, which I have not checked out yet. Can we look at that? Is it still up? I'm going to go look real quick live here on the, hang on. Go to freethewizards.com. Yeah, the website's no longer there, it looks like. So that's interesting. freethewizards.com. So it got pulled down. Said we've spent considerable time and resources thoroughly researching Hasbro and its business segments. Our analysis has helped us determine that Hasbro possesses exceptional assets, loyal customers, passionate employees, and truly special brands. However, our analysis also led us to conclude that the company is severely undervalued and a perpetual underperformer due to its ineffective brand blueprint strategy, flawed corporate structure, and consistent misallocation of capital. It says Alta Fox always prefers to privately engage with our companies. We have attempted to collaborate with Hasbro, but it continues to cling to its failed brand blueprint strategy. Anyway, they said we cannot stand idly by as Hasbro's board of directors makes unforced errors in capital allocation and all this other stuff. So what they were promoting is to simplify and improve the corporate structure by spinning out the Wizards of the Coast segment. And they call this a hidden gem with completely different growth margin and valuation profile than the consumer products and entertainment segments. This is the part where I get into why what they wanted to do was so brilliant in my mind, because they recognize that Wizards of the Coast, and specifically the products that Wizards of the Coast produces, are completely different than what Hasbro has used to managing, which in the past has been like figures and franchises like the Transformers, right? Which they have spun out into this new franchise with all the films and the merchandising and everything else. And that's essentially what they're trying to do with Wizards of the Coast with the upcoming film and TV show. You understand where they're going with this? And um, Alta Fox wanted to change that. They wanted to set Wizards of the Coast aside because they said, look, it's a unique enough thing that it needs to have its own identity moving forward that is still under us, but separate and independent from what you're doing with your other brands. They also wanted to establish a transparent and value-enhancing capital allocation policy for Wizards of the Coast that prioritizes reinvestment in core franchises such as Magic the Gathering and Dungeons & Dragons while reducing speculative bets on non-core video game franchises in hyper-competitive categories, right? So, non-core video game franchises. Very interesting um, way to phrase things there. They said they want to replace the stale brand blueprint strategy with a modern operating plan focused on profitably growing the consumer products and entertainment segments. In other words, growing your user base, not milking them for more money, which is what Hasbro ultimately decided what they would prefer to do, which was how they got the stock devaluation, was because rather than trying to grow the Magic the Gathering audience, they've tried to focus in and strangle that audience for more money. And they attempted to do the same exact thing with the D&D community, only the D&D community rose up and said, yeah, fuck you, bro. Not going to happen. They also wanted to restructure executive compensation to be more aligned with shareholder value creation. So, in other words, um, your compensation isn't just because, it's based on the value of what you bring to the shareholders, and then improving disclosure practices and investor communication to regain institutional trust and justify a fair evaluation for all of Hasbro. So their nominees, it says here, collectively possess corporate governance expertise, retail and consumer experience, strategic planning and transformation backgrounds, transaction skills, and deep knowledge of the Wizards of the Coast universe. They are particularly eager to provide insight and support to the new chief executive officer, who has shown the ability to drive impressive growth as a segment leader. We believe Mr. Cox, who is a first-time chief executive with enormous responsibilities, should be surrounded by a meaningfully refreshed board that includes designated individuals who are assigned by the shareholders with relevant capital allocation, corporate governance, and industry expertise. So what they're saying here is, this is really funny. It's their way of saying that yes, Chris Cox did a great job when he was with Wizards of the Coast as the president. However, and this is where they're saying, he's done a good job as a segment leader, because you have to remember, under Chris Cox, Wizards of the Coast like doubled everything, profits, etc., doubled. Okay, that's you don't have to like the guy, you don't, but what he did for Wizards of the Coast as president was impressive from a numbers perspective, and that's what these guys look at. The investors look at numbers. And they say that he did have impressive numbers as a segment leader, meaning he led one segment, but now you've promoted him to chief executive officer over everything. That's an enormous responsibility, which he isn't quite ready for. So he needs to be surrounded by a meaningfully refreshed board that includes these individuals to help him go forward. It's a way of saying you did good. We think you could do better with help. And here's these people we want to assign to the board of directors to help guide you into that future, because these are all Wizards of the Coast, fanatics. And the people that Alta Fox promoted were people who had deep gaming roots, which is more than what they currently have, with Wizards of the Coast being managed by people who have transaction roots, but not necessarily gaming roots. Um, the the big thing here is they don't agree with the brand blueprint failure, as they called it, which started in 2019. It said when Hasbro announced the acquisition of an Entertainment One E1 for 4.6 billion, which is a 30% premium to E1's all-time high share price at approximately 18 times its trailing 12 months EBITDA. This deal diluted our shares, added a substantial amount of debt to the balance sheet, complicated the investor narrative, and destroyed significant value. Their shares declined 9% the day of the deal announcement and remain dramatically lower than pre-acquisition levels today. This is just one example in a long list of poor capital allocation decisions orchestrated by the current board in the name of the brand blueprint strategy. So going through here, it's mostly about them saying that this is all failing. And that Wizards of the Coast, this is where they say here, Wizards of the Coast is Hasbro's hidden gem. It's really cool there. They purchased Wizards of the Coast in 1999. During the following 20 years, the board did not disclose revenue for that segment. Finally, in February 2021, the company reported Wizards of the Coast as a separate business segment for the first time. But to this day, it still refuses to disclose key performance indicators for Wizards of the Coast. We suspect that perpetually poor disclosure practices have led to a substantial misunderstanding of the quality of the Wizards of the Coast business in the market, rather further contributing to Hasbro's discount to intrinsic value. It was recently disclosed that Wizards of the Coast grew revenues by 42% to nearly 1.29 billion in 2021. Our own analysis and estimates suggest that their contribution to Hasbro's totals had increased from approximately 20% in 2016 to almost 50% of the revenue essentially. As an independent business, we believe Wizards of the Coast would be worth more than $100 per share today, and we anticipate that it would be one of the most exciting and valuable specialty gaming businesses in the world, specifically if it were to refocus investment on core intellectual properties and eliminate loss-driving speculative bets on non-core franchises. Their key franchises such as Magic the Gathering and Dungeons and Dragons have phenomenal network effects, pricing power, and secular growth characteristics. They've maintained a double-digit compound annual revenue growth rate for the last decade and, more notably, grew 42% in 2021 with a 47% EBITDA margin. Looking ahead, the franchise remains in the early innings of a digital monetization and have many attractive reinvestment opportunities. In sum, there are very few companies that have the respective 3-decade and 5-decade track record of Magic the Gathering and Dungeons and Dragons while also generating double-digit top-line growth. And based on Hasbro's current valuation and our conservative fair value estimate of the company's two other segments, shareholders are approximately blah, 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 blah. If Wizards of the Coast was separated in a tax-free spinoff with proper disclosures, we believe it would trade at more than 20 times the EBITDA, or more than $100 per share, unlocking approximately $100, 100% upside for Hasbro shareholders. So these guys essentially, if you want to read through this, and here's where they get into the I don't before we get into that. They're just essentially saying that Wizards of the Coast needs to have better management. It's done well, but it could be even better if we did this. And the people they put forth, Matthew Calkins, comes from Cloud Computing Enterprise Software. He worked at MicroStrategy. He's worked on board games and competed in board game championships. John Finkel is currently managing partner and co-chief investment officer at Landscape Capital. He played various video games professionally, including Magic the Gathering. So he's a professional. He was a professional Magic player before he became the managing partner and co-chief investment officer at Landscape Capital Management. Very interesting. So someone who is, intimately familiar with Magic. Marcelo Fisher. I'm scanning here. He's an accountant. I don't really see any gaming stuff that's jumping into my face, but he appears to be someone who's an independent accountant. Renee Hablau. Software. Okay, Caroline Johnson. Harvard Business School. Okay, so 3 strategic people and 2 people who are gamers. I don't know. It's a fascinating read, if nothing else, into the inner workings of at least one investment group who sees, a potential future for Wizards of the Coast as its own independent entity focused on its core brands, Magic the Gathering and Wizards of the Coast. Wizards of the Coast, Magic the Gathering and Dungeons and Dragons, and wants to focus on growing those, growing the customers, growing the product lines, growing all of those things. And that's what we've been talking about in these conversations the last 2 weeks, that Wizards of the Coast needs to stop screwing around with the OGL stuff and just focus on making one D&D the best version of D&D that it could ever be. And if you want to monetize, that's fine. Find lots of ways, like with the TV franchise and the film franchise and all these things that are related to Dungeons and Dragons. Continue to do that. That's good. But we need to have different management who understands that, because it's not working the way it currently is. I just wanted to have this conversation. Hopefully you enjoyed it. It's old news, but I found it to be interesting news in the light of what's been going on. Like, subscribe, hit that bell icon, drop a follow below with the memberships if you can. There's 3 different tiers. You can also support with super chats and super stickers. Don't forget the Patreon page for our own tabletop stuff. There's a Discord. All the links are down there. Till next time, everybody, stay safe, stay healthy. Happy gaming.